Hey guys, it's Mark Pyers, home-based business tax coach and wealth coach, better known as a CEO and founder, along with my beautiful wife and business partner, Mrs. Levita Pyers, of an incredible tax educational platform now operating about 27 years, where we teach the masses or anyone that's open to learn information that somehow, for whatever reason, has been forbidden to be taught in the educational system. And that is, the more you know, the less you will legally, ethically owe in taxes. Okay. And so we don't teach tax evasion. We don't teach manipulating the system. What we teach you, again, are the rules directly from the IRS, how to legally reduce your federal and state taxes, putting more money in your pocket to allow you now to use that money to invest so your money can start making money for you while you're sleeping. Warren Buffett said it best. He said, if you don't find a way to make money while you're sleeping, you're going to work until you die. And so guys, look, today is March the 11th, 2022. I'm coming at you from my tax deductible home office here in California. I wanted to share with you some knowledge. I often say that knowledge is power. But what I really want you to take out of that is, or take from that is, applied knowledge is power. And so look, I can go on and on. For those of you that have been watching me and following me on YouTube or social media, some of you, comment on my information, and some of you just, in the background, just stay in the background and take this information. Well, take this information and apply it, because it will truly change your life. And I want to ask you to do me a favor. If you're watching this on YouTube, Instagram, Facebook, wherever you're watching this, I want you to share this information. The masses have got to now understand, if they are not saving their money, not investing, saving their money. I want to say that again for the person in the back of the room that is going to think that I'm talking about investing, okay? Before I even go any further, let me go ahead and put a disclaimer. I am not a financial advisor. I am not providing financial information. What I'm providing you is information and education for you to evaluate and determine what, if anything, you want to do with it. Okay, I'm sharing with you my experience, where we're going to be talking today about money, because in the economy that we're living in today, if you had learned this information, and or if you had heard me for many years talking about this and you did not apply it, you have put your family in front of a financial tsunami called inflation. On top of the inflation, you have additional taxation as prices rise. Guys, I'm telling you, I'm hoping that you're just seeing this for the first time. So no further ado, let me go ahead and get started. If you guys want to learn more information, you can go to my website. I'll also put that link inside of the description, okay? And it's www.theacademy of Financial Education, not financial advice, because if I was truly a financial advisor, you wouldn't be watching the information that I'm going to share with you. And so I'm going to make this really short. What I want to do, guys, is I want to show you a real example. Okay, I was sitting here at my desk and it hit me like a ton of bricks, and I decided to go do the research. I'm going to show you a real example of a home that my wife and I, sold in 2016, October 2016. And I want to show you this as another illustration how gold and silver, physical gold and silver. I know the masses don't know anything about this, because since 1913, the education about gold as money, not an investment, gold as money versus saving your paper dollars in paper, just simply converting it into gold, apple to apple, red apple to red apple, green apple to green apple, okay? And just save it. Not putting it in any risk, not putting it in a 401k plan. I'm not knocking 401k plans. That's not what this is about. Not putting it in an investment vehicle, okay, where you're going to end up paying taxes on top of your gains. I'm talking about saving your money in something physical that's going to protect you against inflation or the deflation in the purchasing power of your dollars, because that's what we're experiencing right now. Okay. And so I want to jump over here to Zillow. And this is the property that my wife and I own. In 2000, we bought this. In fact, I'm going to just go through the charts because I believe the documentation beats conversation and everything else is a lie. Okay. And so I'm going to go through this relatively quick. So we listed the property for sale on August the 17th, 2016, and it went into pending sale on August the 26th, 2016 for $540,000. And so after some negotiation, we were actually able to get the buyers to pay us on October the 3rd, 2016, $556,500. Now, I won't go into the details, why the additional money was added, but nevertheless, I want you to just, pay attention to this dollar amount. Now, this is not to talk about real estate, but I'm going to do an entire different video on this entire transaction and how some of you are thinking that you are making money or your house has increased in value, or let me see how I want to put that you are actually making a profit in your house and you're not. Okay. And so they bought the house for $556,500. I think they put down 20%. And Zillow right now, today here on March the 11th, 2022, is estimating that the house value is $894,600. Let me say this. Don't be impressed with that. Okay. Don't be impressed with that. But again, I just want to compare whether or not gold and silver protects the purchasing power of your paper dollars from inflation. And so when you look at the sale price that happened October the 3rd, 2016 to current date, March the 3rd, 2022, that the house value is $894,600. Here's what I want to ask you. Did the house get any bigger? Is the house in a different neighborhood? Does a house have any more additional rooms? Is a house on any more land than it was when I sold the house in 2016? The answer is no. And so some people will look at this and think that the house increased in value. When in reality, the wealthy understands that the only reason the house is valued at $894,600 is because the purchasing power of the $556,500 has declined, and you can no longer buy the house for $556,500. Now it's going to cost you $894,600. Let me bring up a calculator really quick. Okay, so let's go ahead and do the math. And so currently, again, Zillow is saying that the house is worth $894,600. Again, that is a zestimate. That is a guess, right? Someone may come in and buy the house for $750,000. We don't know. All right. And so now what I'm going to do is I'm going to minus what they paid for the house, which was $556,500. So that means that we're looking at a inflation rate or an increase. Okay, we'll use increase of $338,100. So the things that I want you to remember is I want you to remember the date that the house was sold, which was October the 3rd, 2016. I want you to remember the price it was sold for, $556,500. And I want you to remember, we'll come back and take a look at this. I want you to remember the zestimate, the estimate, okay, a value of that house today. And so now what I want to do is I want to jump over to a site called kitco.com. And I want to take you back to October the 31st, when that house closed, 2016. And I want to show you what the value of 1 ounce of gold was. So you can see right here, roughly about $1,270 on October the 31st is what 1 ounce of gold was, right? And so let me bring up another calculator. And what we're going to do is we're going to take that $556,500 $500, which was the price that the house was purchased for. And we're going to say, instead of you taking that money and acquiring the house, let's just say that you took the $556,500 and you converted it into gold at $1,270 and you buried it in your backyard, okay? Now, again, this is not comparing buying a house versus saving in gold, okay? So let's go ahead and divide that by $1,270, which was the value of 1 ounce of gold spot price in 2016. That would have given you 438 ounces of gold. The current value of 1 ounce of gold today, you can see right here above, is $1,991. So we're going to now say times $1,991 means that your $556,500 in gold today would be worth $872,434. Wow. And so let me jump back over to Zillow, because here is what I want you to pay attention to as I slide these side by side. Zillow is saying that the Zestimate value of this house, okay, has increased from $556,500. Now it costs you $894,600. We just discussed that that is not the value of the house increasing because the house became more valuable. That is the inflation of the price of the house, or, listen to this, the loss in purchasing power of your paper money. If you had saved that $556,500 in paper and buried that in your backyard, today you would be over $340,000 less or short of being able to buy that house. I hope I explained that so you guys could truly understand it. And so here's what you can now look. Facts are facts. Okay. Everyone is entitled to their own opinion, but everyone is not entitled to their own facts. And so just simply saving your paper dollars in physical gold, you can see that gold increased almost equal to the inflation. Did you guys see that? If you had got this information in 2016, when I was sharing this all over the internet, the $7 gas prices wouldn't be affecting your pockets today. Okay. The $5 a pound for chicken wings would not be affecting your pockets today. Why aren't they teaching this information? Okay. Let me bring up another calculator. Let me go ahead and clear this out. I want to now jump over to silver. Okay. Another God's money. Okay. We're going to go back to October 2031. You can see in October 2031, 1 ounce of silver was roughly about $17.75, right between $17.50 and $18, right? So $17.75. Let me go ahead and bring back up a calculator and let's just do the same simple math. So the price of that house, or the cost of the house, was $556,500, right? What did your paper money do? Well, today we know you couldn't buy that house today. But what if you had saved the $556,500 in silver, buried that in your backyard? No interest, no taxes, nobody controlling it but you. Well, let's do the math. Divided by $17.75 would have given you 31,352 ounces of silver times the cost of 1 ounce of silver spot price. You can see it right here above, $25.95. So times $25.95 would have given you now a value of $813,587. Let's go back over to Zillow. Let me bring that one back up. That's going to be our gold, and that's going to be our silver. And can you see how gold and silver protected the purchasing power of your money against inflation. Wow. Okay, so now what we're going to do, guys, again, we're going to get to the facts. So they purchased a house for $556,500. They took out a 30-year loan, and their interest rate was 3.82%. So let's go ahead and hit calculate. And so if I scroll down here to the bottom, you can see that their monthly principal and interest was $2,599, 360 months, right? Their total payments, principal plus interest, $935,781 if they would have paid this house off over the next 30 years. I'm going to hit what most lenders will never show you, and that is the amortization calculator. And so what we're going to do is we're going to take the same 6-year period from March 2022 to March 2028, and I'm going to show you the results, how this individual couple didn't really earn what they think they earned on this property. And so let's go down to 2028 of March. And remember, guys, I'm going to do a whole training on this because there's a lot for you to learn here, okay? And so here we are, March 2028. So I'm going to copy all of this information here, and we're going to take this over to an Excel spreadsheet. So I'm going to hit copy, go over to Excel spreadsheet, and I'm going to paste this information in here. And let me go ahead and expand it so you guys can see the numbers. We're going to get the facts, right? And so here's the interest. So what I'm going to do is we're going to go ahead and get the total sum of this interest. So I'm going to hit total sum. And then what I want to do is I also want to go ahead and get a total sum of the principal, the amount that they actually paid that went towards the principal payment of the house. Okay, so let's go down here and get these two numbers. And so you can see, let me make this red and let me make it bold. You can see that they paid $121,843.41 in interest, plus they paid another $67,912 towards the principal, okay? So the $121,843, that went in the bank's pocket, right? The $67,912, that went towards the $556,500. So if I take this, and go over here and hit total sum, okay? Let me go ahead and make this one bold. And let's go ahead and make this red because this is blood money, okay? You can see that $189,755 is what they paid in interest plus what they paid in principal. So if I go back over, let me go back over to Xylo, and let's go get what they said the estimate is. I'm going to bring up another calculator. So let me go here really quick. Let me bring up a fresh calculator. We're going to go ahead and assume this estimate of $894,600, right? So what do we have to do? Well, we got to minus $189,750 from that. And so we're going to say minus $189,755, which means that brings the house down now to $704,000. Well, it gets even worse than that. Okay, the reality is now they're going to have to pay taxes. If they're a married couple, they're going to have to pay taxes on $200,000 of this if they sold this house today. So let me bring up another calculator and let me go ahead and clear this out. And let's just take the $200,000 times, that's going to put them in about a 26% tax bracket. And so now we got to minus another 52,000. So minus another 52,000. Well, remember, and so let me go ahead now and put the value of the house, and I'm just going to say 890,000, okay? They're also going to have to pay the real estate agent to sell this house. So times 6%, that's going to be another minus $53,000. I've already started my other training, guys. That's going to bring the house down to $599,445, but I didn't calculate state, okay? The state on the additional $300,000, well, let's go ahead and call it $200,000, okay, times another 5%. So they're going to give the state another 10,000, right? Minus 10,000. I think you guys know where I'm going, right? So 589,000. And there's some additional costs when you sell your house. And did I tell you that, guys, they don't get to write off the mortgage interest off of their taxes? So let me bring up another calculator. I know some of you homeowners said, man, this is crazy. I didn't know this, right? $121,843 in interest they had to pay the federal and state taxes. So I'm going to assume that they're in a 20% tax bracket, another 5% state. So let's just say times 25% in taxes. We got to minus another $30,460. So let me bring that calculator back up. Minus another $30,460 that they paid in taxes. Okay, that brings them to $558,985. But I'm not done. Let me bring up another calculator really quick, because I know what the property taxes are. I'm not going to waste the time jumping over there. The property taxes are $6,000 a year times 6 years. That's an additional $36,000 that they had to pay. So minus another $36,000. And you can see what happened. If they sold this house today, they would not make any additional profits. The only person that got rich was the bank. Did you guys see that? But guess what? If you had learned and had saved some of your money, okay, in physical gold and silver, today you would not be a victim of the current inflation. I hope you guys got what I just tried to give to you. And so with that being said, guys, look, my name is Mark Pyers, home-based business tax coach and wealth coach, the CEO and founder, along with my beautiful wife and business partner, Mrs. Levita Pyers, educating the masses off the plantation of taxation. Look, everybody has to pay every dime in taxes that they legally owe. But if you know the information, that the wealthy is known, and I teach this information directly from the IRS themselves. Again, we do not encourage you to try to manipulate or play games with the IRS, because you don't have to. When you have the knowledge, you have the power. But when you apply that knowledge, you'll have financial independence, okay? Whatever that means for you. And so the message here today, if you are not saving a portion of your money in physical silver and gold, you are robbing your children of their future wealth. And so I'm going to put a link to a company that I've been with now for over 2 years that has not only given my wife and I the ability to be able to save our money in assets, to be able to save our money in silver and gold. And at the click of the button, we can take the profits without selling the assets. That just went over somebody's head, okay? If you would like to learn more information, guys, the information is free. And then ultimately the decision is yours, okay? Because we're going to do it regardless of whether anyone does it, because we've been informed. And now we're sounding the alarm, and we're helping the masses learn something that, unfortunately, for whatever reason, the school system won't teach. And that is, you need a business, okay? Having a business puts you on the better side of the tax code. That's why the wealthy operate businesses and they don't have jobs. Again, we're not knocking jobs. I want to teach you how to be able to walk into your job and take as much of your paycheck home without facing unnecessary taxation, okay? Legally, ethically, and morally. But more importantly, I want to show you how to get paid to protect the value of your money. And the only thing that I ask is that you go out and you share this information with as many people that are willing to learn what you just learned today. And with that being said, guys, again, my name is Mark Pyers, home-based business tax coach and wealth coach, CEO and founder of the Academy of Financial Education, along with my beautiful wife and business partner, Mrs. Levita Pyers, saying to you, my friend, you and only you can make a decision whether or not you want to change your life and start to create true financial independence. I don't know what wealth is to you, but I know everyone would like to have financial independence. And that's what we're giving people. And so with that being said, we won't see you at the top. We'll see you on the other side of freedom. Look inside of the description of this video. There's a couple of links that will get you to more information. I hope you guys got value out of this. We'll see you on the next Change Your Life presentation.